What is good? Welcome to a brand new video. This is the trade that I took on gold, which made me $11,000 or $12,000. One was on a challenge with funding pips, and one was on my funded account with PIPFARM. Okay, this trade made me $1,700 on my PIPFARM account and like $9,000 ish on my funding pips. Actually, I had two accounts, so two challenges. But obviously, I'm not gonna double count the profits because at the end of the day, it's just a challenge. But I did also take this on a funded account, which made me nice profits. So let's get right into the breakdown. So first of all, we can see here that we had this liquidity moving upwards, right? We had this low right here, which was left, from if I'm not mistaken, like I mean mid Asia. This was also like towards London. This was actually also a London low, but that was actually where we took the trade. So you can see that we're building these liquidity points whilst price is not into a demand yet. We can see that here that we had the 50-minute break of structure, beautiful break of structure to the upside, showing a bullish continuation. Obviously, the fake break of structure, like whatever, showing that not really a break of, it is a break of structure at the end of the day, but it's just liquidity, right? Now, if you go down to the lower time frame, we can see that price beautifully came into demand. And once it came into demand, all I did was want to go to the 1 minute. If you look at every trade, guys, every trade that I'm breaking down, it's very simple. You have a demand, you have fake break of structures, which is just forming liquidity. You have lows, liquidity, and then you see price come in. It perfectly bounces from where you expect it to bounce, which mostly is aligned with liquidity. And from there on, all you have to do is literally wait for price to give you the entry model. So what we can see here is we had this liquidity sweep, we had this break of structure. I didn't enter on this one. I just waited for price to re-break these highs, which from there on I did enter. So that was boom, longs right there, and then stop loss below this low. So actually 37 hits, which was just a TP on my live account. This was a 1-to-1 on my live account. I closed this on accident. I'll be honest. I closed this trade on accident. That was not really supposed to happen. But it did happen, which I don't mind it happening because it was a live account. I still made $1,700 or like 500, yeah, something like that. So it was a little bit. Actually, my entry was a little bit better, I think. But either way, I was not supposed to close, but essentially the target of me was 33.50, right? 33.50, which are the highs from here. You can see there are two highs right here. Beautiful two highs aligned with supply zone. You can see here that there is a supply zone. Price like small pushes into the supply zone, but didn't exactly push into it. Obviously, if this push was here and the supply was not here, like this push was not here, the supply could have held, or even this high would have been a good high. But obviously, if there's double liquidity forming, it's most likely gonna sweep that liquidity. And from there on, you can see like absolutely beautiful price just pushing so hard. This will actually also align with CPI, but it gave that fake initial push, like it gave that push, and then actually, yeah, it went a little bit down and then up again, and then it pushed a lot down, and then it just kept pumping on. You can see this continuous pump since late New York until all the way Asia session was still pumping, which is kind of crazy. But I do expect higher price on gold as well. But you can see just absolutely beautiful price action on like gold and Euro USD for the past couple of days. Absolutely beautiful. These trades, all in all, from the past couple of days, have achieved me over 1 million of funding, maybe like 25 to 30K in payouts. So overall, it's looking very good. Either way, hope you guys enjoyed this breakdown yet again. Hope you guys are learning something new, and I'll catch you guys in the next one.